Vertusio, the shout-out app for industries, businesses, and services.
Factors affecting commercial real estate. The COVID-19 epidemic has shaken the commercial real estate (CRE) sector. As businesses reopen, owners are faced with difficult choices like whether or not to continue renting office space. As a result, landlords and other CRE investors may continue to lose money. Experts in their fields, Forbes Real Estate Council members keep an eye on emerging industry trends that may impact future real estate investments. Some discuss key CRE investing trends for 2022 and beyond and how investors may prepare. Sales increased. The market will continue to develop rapidly in the second half of the year, powered by low interest rates and inflationary pressures. Investors will want to cash out while the going is good. Secondary and tertiary markets will continue to experience increased demand as investors seek slightly higher rates. Eric Shirley, Four Oaks. Vacant office space. Lease renewals for offices. The economy is improving, but unemployment is rising and people are moving. I expect most steady enterprises will retain their leases but move to smaller spaces, resulting in vacancies in numerous regions. Ken McElroy, MC. Federal aid changes. We should rigorously monitor governmental participation in commercial lending. In the event of continued inflation, the federal government will be obliged to intervene in interest rate decisions. Business owners can determine whether to acquire or lease commercial space by tracking the Federal Reserve's economic forecast. Wider use of tech. The epidemic has highlighted the value of data, allowing clever investors to operate outside their usual asset classes and geographies. Wider use of technology and greater market data comprehension would only raise demand on already scarce supplies. Oli Ferrego Coyote. Demand outpaces supply. Demand for commercial investment properties has never been higher. Wealthy people buy real estate to hedge against inflation and take advantage of low interest rates. Due to the lack of residential properties, many investors turn to commercial, increasing competition. An office space debate. Return to work and pandemic circumstances are crucial considerations. Please assume that the previous workplace paradigm will be reinstated and that employees will accept it. Several firms are mandating immunizations, which might affect millions. Michael J. Polk Properties. More ESG impact. Environmental, social, and governance. ESG impact real estate from all angles. It affects the renters, the space they desire to utilize, and their return to work. It affects access to stock and debt markets. It also affects value as more cities, states, and nations regulate ESG. Green Generation Solutions, LLC. Bradford Doxa. Inflationary concerns. Capital has been halted due to worries about vacancy and rent increase. After a 15-month absence, investors and lenders are returning to the market. Act immediately when you locate a bargain you like since the market is hot right now. Kaiser Group, LEAP, Capital Growth Stable. One of the main reasons some commercial real estate industries have thrived throughout the epidemic is cash availability. The capital was scarce in previous recessions. During the pandemic recession, plenty of money was available for industrial, multifamily, self-storage, and health science real estate. City Commercial Real Estate, Inc. Actual value. Real valuation is difficult despite central banks' seemingly endless supply of money. Without these initiatives, the value would react more quickly to changing consumer and digital employee trends. In other words, the value of CRE is often determined by a central bank. Twitty and Company. Inflation. If inflation persists or perhaps increases, the Fed will be obliged to act and hike rates. Whether the present high inflation is transitory or not remains to be seen. It's conceivable that the economy will stabilize and inflation will fall, but not likely. Age and physical condition. The age and overall quality of a property are crucial considerations when buying or selling it. People are less hesitant to purchase a brand new building than a building that is 20 years old. Older buildings frequently have concerns, such as items that have outlived their useful lives, air conditioner, furnace/boiler and water heater, structural flaws, and out-of-date construction. It can be difficult to sell a building built before 1978 since the paint is more likely to be lead-based. Buyers choose to avoid it because it can create health problems. Renovation. When contemplating a house, many buyers check for the possibility of modifications. It's nice to add more rooms, patios, bathrooms, office space, and other features to the house. As a company grows, it may desire to expand its space without purchasing an altogether new facility. Factors that hinder renovations, such as the size of the land, may deter them from buying your home. As a result, your home's value may increase if the buyer can renovate the property.
If you've enjoyed watching this video, then give this video a like and share with a friend. Also click on the subscribe button below to be notified as new videos are released.